Friends, today something absolutely wild is happening on the market. Bitcoin is hanging between life and death, altcoins are collapsing without stopping, ETFs are showing fear, and investor sentiment is falling below the floor. And the main question, is this the beginning of the end, or just one last deep breath before a new push upward? In this video, we'll break down what exactly broke in the market, what the real reasons for this panic are, where the price may go next, and which zones are now deciding everything. We'll talk about scenarios, risks, and how to behave in this chaos. I'll also show you what the strongest crypto people, top analysts, and veterans who have already survived more than one crash are saying. So make sure to watch until the end and subscribe. Before we start, this is not financial advice. Everything I talk about is my personal view and judgment. Use it as an additional point of view, not as a call to action. Let's start with the main point. Our forecast is still playing out 100%. At first, we saw the initial test of the resistance zone at 88,000. However, what happened next unfortunately confirmed my thesis about the negative background for crypto. We did break through this resistance and even dropped to 86,000. And today, Bitcoin has fallen even lower. On the 1-hour chart, we saw a sharp drop to 81.5 thousand. At the same time, the market reacted terribly. Just look at this liquidation picture. In the last 4 hours alone, more than $1 billion were liquidated, and almost $2 billion in the past 24 hours. We did break that resistance and even went as low as 86,000. And right now, we are still in the danger zone. If we don't see a reversal and a consolidation above 88,000, this may become the beginning of an even longer correction. In that case, our next stop is around $77,000. But what actually caused this drop? There is one indicator today that speaks louder about the market than any news: Bitcoin ETF flows. And here the situation is extremely telling. For the entire month, we only got 3 days of positive inflows. 3. That's tiny. This is not just someone taking profit, it's a signal that institutional money is not ready to take risk and is not entering crypto. And when ETFs, the very thing that created demand and pushed the market upward, suddenly flip into consistent outflows, that is the first alarm bell of a difficult period. And now, on this background, everything else begins. The Fed basically broke market expectations. Investors were almost sure they would see the first rate cut in December, but the minutes showed a different picture. Part of the committee doesn't support any moves until the end of the year at all. This immediately hits risk assets because high rates mean one thing: money is expensive, liquidity is low, and growth potential is limited. And in such conditions, nobody wants to hold risk. Next, overheating of the tech sector. All these AI giants that were pulling the S&P 500 upward have themselves become a source of fear. Nvidia showed insane revenue, but the market is starting to ask, how long can this last? Is this demand real? Aren't too many expectations already priced in? And once doubt appears, money starts exiting the entire high-tech segment. And on this background, crypto gets hit the hardest because the most painful mechanism kicks in: liquidations. The market has been overloaded with leverage in recent weeks. One serious move down is enough to trigger a chain reaction. For the last few weeks, liquidations of $1 billion per day have basically become the baseline. Longs close, liquidations fire off, volatility spikes, and everything collapses like dominoes. Reuters already wrote that a wave of liquidations was one of the main drivers of the drop. And this is true. Now add the global background: geopolitical risks, questions about economic growth, doubts about inflation, trade conflicts. All this pushes investors out of risk assets. Even The Guardian wrote openly, the combination of fear around the AI bubble and the drop in probability of quick rate cuts killed the crypto market in just 1 week. And the final touch: in such moments, crypto does not behave as a hedge. It behaves as the riskiest asset on the planet. If stocks fall 2%, crypto falls 10% or 20%. This is not an exaggeration. This is classic behavior during fear periods. We get a perfect storm: negative ETF flows, Fed uncertainty, overheated AI sector, liquidation wave, harsh macro backdrop, and total fear. That's exactly why everything is falling. Now let's look at the reactions of the people who actually move the industry. Because no matter what we think about the market, it's their actions and words that shape sentiment and show where everything is heading. And we'll start with Hasib Qureshi from Dragonfly. Hasib wrote that even if this is the beginning of a bear market, it will be the easiest bear cycle he has ever seen. He reminds us, in 2022, we went through Luna, 3AC, FTX, banking crises, and total regulatory pressure. Compared to what we are seeing now, this is just noise. His message is very simple. Crypto fundamentals are stronger than ever. There is no point in panicking. All that's left is to wait. Next is CZ. He is, as always, completely calm. He writes the same thing he's written during every crash over the past 10 years. Every time some people think crypto is finished, but the drops end and the market keeps living. And these aren't just words, because even back in October, CZ warned that we would see a strong pullback. Historically, he goes through these periods very easily. Next comes Alex Svanovic, CEO of Nansen. He says directly that the current pessimism on Twitter does not reflect the real state of the market at all. The crypto infrastructure has never been better, regulation is becoming more structured and even more favorable in the US. The strongest young teams are entering the industry, and according to him, the best crypto products will appear in 2026 to 2027. The main message is, don't look at the local noise, look at the cycle forming ahead. Next is Santos from Inversion Capital. His view is extremely pragmatic. He says the market became too overconfident after the growth, and people act as if this is just a short cooling before a new rally. He reminds that projects like Ethereum, Solana, and others are useful, but this does not mean their current valuations are justified. Many coins trade not based on business logic, but based on religious belief in a project that will definitely grow. His thesis is clear: valuations are inflated, and we may go lower. Moving on to Cobie. He is one of the oldest figures in crypto, founder of UpOnly. He writes that Bitcoin may be giving lower returns, but something else is much more important. Altcoins are becoming increasingly dangerous because the market has changed. In 2017, people bought coins on spot and held them for months. In 2025, most people are in futures, don't look at valuations, and literally live in liquidation mode. FDV is inflated, supply is huge, and pre-market trading adds extra pressure. But Cobie's final message is positive. The smart and patient will still get their best opportunities. Ansem, another top crypto influencer, draws attention to the speed of the drop. He is slightly concerned by how sharp the move was, but he calls the 88 to 91,000 zone on Bitcoin the strongest area for a rebound. Essentially, he sees a structure that can work, unless a truly massive negative event hits. ICO Beast, known for making huge profits on ICO cycles, now writes that the only thing worth hoping for is a quick bounce, because otherwise the situation may become very bad. He even voiced an unpopular opinion. There is a non-zero chance that crypto has already seen its intergalactic top and will never return to it. The community, of course, told him not to be dramatic, but the very phrase shows how strong the pressure on traders has been. And the final voice, Michael Saylor, the man who holds more than 649,000 Bitcoins. He is, as always, positive, and writes that MicroStrategy continues buying BTC regardless of market noise. He repeated his famous line, "If you want to fly on a rocket, be ready to withstand the G-forces." During the drop, the company bought over 8,000 BTC worth more than $800 million. Saylor simply does what he has done the entire cycle. He buys and holds. If we put together the whole picture, we see something interesting. Professionals are not afraid, they see the risks, but they are not panicking. Some say fundamentals are strong, others say valuations are inflated, others see opportunities, but none of them says crypto is finished. And that is the most important thing. Friends, thank you for watching. Like and subscribe to the channel, be sure to write comments, and remember that this video is not financial advice, just my view of the market. If you want an analysis of your favorite coin, write it in the comments.